To utilize gap insurance, you must have a car lease or loan, as it is not applicable when you own a car outright. When financing a vehicle, it is essential to have collision and comprehensive coverage to protect against losses due to theft or accidents. If your car is stolen, totaled, or damaged, you can file a claim under either the collision or comprehensive portion of your insurance policy. However, because cars depreciate rapidly, insurance payouts will only cover the vehicle's current cash value. For example, if you took out a $40,000 loan to purchase a car, and its value decreased to $30,000 when it was damaged or stolen, leaving a remaining loan balance of $10,000, gap insurance would cover this $10,000 difference. This means you won't be responsible for paying the remaining loan balance out of pocket. Gap insurance essentially bridges the gap between the insurance payout and the outstanding loan amount, providing financial protection against depreciation. By understanding how gap insurance works, you can effectively use it to your advantage and avoid financial burdens in the event of a loss.